Well, red and white cabs digging into plum cake, exchanging gifts, and trees decorated with ornaments. One knows that it is time for Christmas as the world remembers the birth of Lord Jesus. Now, Christmas is being celebrated worldwide with vibrant festivities and joyful gatherings. From sparkling lights of Bethlehem to grand Christmas celebrations in Mumbai has come alive with holiday cheer. So that was all about yesterday. We saw Christmas cheer everywhere around the world and hope you had a great holiday too. Here's welcoming you back to ET now to take you through all of the global and domestic cues that you must track today for the trading session that we're now getting into. And we'll also tell you about all of the stocks that you must keep on your radar today. So after Christmas cheer, let's see how the markets are shaping up for Friday. Now, US equity futures, they are ticking slightly higher in early Asian trading after Wall Street notched fresh highs. Fresh records for the second straight session on Wednesday before closing. On Wednesday, S&P 500 rose about 0.3% to close at a new all-time high. The Dow Jones Industrial Average that also gained more than 280 points or about 0.6%, also ending at a record of 48,731. Meanwhile, the tech-heavy Nasdaq Composite that advanced about 0.2% to settle at 23,613. So yes, that's the levels that we are tracking as far as the Wall Street is concerned. Now remember, gains were broad-based with Nike among the top performers on Wednesday, jumping about 4.6% after Apple CEO Tim Cook revealed that he has bought fresh shares in the company. On the other hand, we also had Micron Technology, which climbed nearly 4%, while the Citigroup added about 2%, with both of these stocks hitting fresh highs during the session. Now remember, this rally followed another strong close on Tuesday that was led by tech-heavy names including Alphabet, Nvidia, Broadcom and Amazon as well, which pushed the S&P 500 to a then record of 6909. Now, markets are also digesting delayed economic data, with the Commerce Department reporting US third quarter GDP growth at a robust 4.3%, well above expectations. Now, the stronger growth initially cooled hopes of early interest rate cuts, though Fed fund futures still point to 2 rate cuts by the end of 2026. Now, looking ahead, the street is watching for the traditional Santa Claus rally, the year-end market boost that typically spans the last 5 trading sessions of the year and the first 2 sessions of the new year, running this time from December 24th through January 5th. So let's see if that pans out or not. But so far, looks like the rally is really incoming, with the last 2 sessions registering record highs for the S&P 500 as well. But time now to take a look at how the commodity markets are shaping up. And oil prices, they are largely steady even as markets are staying alert to any potential risk of supply disruptions. Despite the near-term stability, crude is heading for its biggest annual decline since 2020. If we talk about levels, WTI is hovering close to that $58.5 per barrel level, whereas Brent is holding near $62.5. Both marginally higher in trade today. Meanwhile, precious metals, they are sort of taking a breather after record-breaking rally. Gold is pausing near that $4,510 an ounce, while silver, that remains elevated at around $75. Meanwhile, platinum, that is still outperforming, jumping nearly 5%, supported by tight supply and strong investor interest. So yes, that's about the commodity market as well. But now, time to take a look at all the top global stories that we are tracking this morning. And let's start with what's happening in Ukraine. Now, Ukrainian President Zelensky has spoken to US President Donald Trump's special envoy Steve Witkoff and Jared Kushner for about an hour on the final draft of a peace plan. Now, remember, earlier this week, Zelensky had presented a 20-point draft peace plan that described the main framework of ending the war. However, he has also said that key territorial questions remain unresolved in the new draft. Meanwhile, Russian Foreign Ministry spokesperson has said that there is slow but steady progress in peace talks. Moving on the US front, US President Donald Trump has said that they have carried out airstrikes against Islamic State militants in northwest Nigeria, claiming that the group had been targeting Christians in the region. Taking to social media, he said, and I quote, "Tonight, at my direction as Commander-in-Chief, the United States launched a powerful and deadly strike against ISIS terrorists come in northwest Nigeria, who have been targeting and viciously killing primary innocent Christians at levels not seen in many years and even centuries." End quote. Moving on, let's get you what's happening on the tech front. Now, Nvidia is forging ahead with another bet on AI boom, and eyes for the largest ever acquisition till date. Now, the chip major has agreed to a non-exclusive licensing deal with AI hardware startup Grok for $20 billion, as per some reports. Now, some of Grok's executives, including its founder and CEO, will join NVIDIA and is expected to continue operating independently. And now in some more tragic news coming in from California, as after a tough and deadly Christmas Eve with rescues and evacuations amid widespread flooding, another storm has battered the state on Christmas Day, as weather forecast expected to continue on Friday as well. Now, a series of severe thunderstorms move into northern California, with the wind gusts setting off flash flooding in San Francisco metro as well. A moderate level of 3 or 4 risk of excessive rainfall is in effect for much of Southern California, including Los Angeles. Next up, from former Prime Minister Khaleda Zia's son and BNP acting chairman Tariq Rahman returned to Bangladesh to a rousing welcome on Thursday. That's after over 17 years in self-exile in Britain. The party hopes this homecoming will energize supporters and better its prospects in the upcoming February 12th parliamentary elections. Now, in his first speech, Tariq invoked Martin Luther King Jr.'s quote, and I quote, "I have a dream" speech to claim, and I have a plan. All right, so that's the latest that we are picking up from Bangladesh. But time now for a very short break when we... Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar, and it's time now to take a look at how the Asia Pacific markets have opened up. And it's a rather day in the green. That is what we are seeing for the Asia Pacific front, with several exchanges in the region closed for the Boxing Day holiday. But let's see how the indices are doing. China's Shanghai index, that's managing to hold on to its 3,960 odd level, up about 0.1%. Hong Kong's Hang Seng, that's actually close, but it did end about 0.1%, nearly 0.2% higher for that matter, 25,800. That's the level that it has managed to hold on to. Japan's Nikkei, that's actually doing pretty well in trade today, up nearly 1%, 50,870 is where it's trading. So yes, good day of trade coming in for Japan. South Korea's Kospi, that's also trading about 0.6% higher, 4,133 is where it's currently trading. So yes, a good day of trade coming in. Australia and Hong Kong's Hang Seng, Australia and Hong Kong markets, they are closed for the holiday today. So yes, that's how the markets are looking. Now, if you talk about the Nifty, we did end above that 26,140 mark, but it was a negative day that we saw for the Nifty on Wednesday. After that positive start that we saw for the week, we have now declined from those levels and ended at that 26,142 level. And today also we are expecting a very muted start, down about 44% on the Nifty implied open. So yes, a mildly negative start is what we are expecting for the Nifty. But speaking of Nifty, let's take you through what happened on Wednesday and how the markets really panned out. Nifty actually snapped its 3-day gaining streak and ended at that 26,142 level. Nifty Bank also ended below that 59,200 mark. All of the indices actually ended in the red. The broader end of the market, that also witnessed some kind of selling pressure. Nifty mid cap, that actually snapped its 4-day gaining streak. Nifty small cap, however, that gained for the 5th straight session. So yes, small cap indices actually fared better. If we talk about sectors now, Nifty Realty, that was the top gainer, top sectoral gainer. Nifty Metal, however, that also gained for the 6th straight session. Meanwhile, if we talk about the losers on the sectoral front, Nifty Pharma, that was the top sectoral loser on trading in the trading session on Wednesday. Nifty IT, that continued to see its fall for the 2nd straight session, especially because of the H1B visa rules that the US has come out with, and it's doing away with the lottery system. So IT stocks, all of them saw some kind of pressure on Wednesday. PSU Pack also closed in the red. PSU Banks, they closed in the red for the 2nd straight session on Wednesday. FMCG, that also snapped its 3-day gaining streak actually, and Nifty Energy, that also ended in the red, ending its 3-day gaining streak. So yes, it was a rather negative day that we saw for the Indian markets on Wednesday, and today also we are expecting mildly negative start only, despite the positive skews that we have picked up from the US as well as Asia. But let's see how it really pans out. But lots of stocks that are going to be in focus today, and they could be on the move. And let's start with Strides Pharma, which is going to be in focus because there's been a GMP inspection by US FDA that was concluded at the US facility, and a Form 483 with 4 observations has been issued. So yes, Strides Pharma is going to be in focus. A slightly negative news flow over there. Let's see how the stock reacts to the development. Next up, LT Foods. That's the stock that's going to be in focus. The company has announced that is going to set up a new regional rice manufacturing facility in Raichur. Now, this facility is going to come with a nearly 30,000 million ton annual capacity and will have a capex of about 6 crore rupees. That's the latest announcement that we are picking up as far as LT Foods is concerned. So, yes, we'll watch out for this stock as well. Next up in the line is NBCC. Now, it's Overseas Realty Development is the latest development that we are picking up. They've acquired nearly 14,770 square feet of land parcel in Dubai mainland. This is for about 15 million dirham. So this is through its wholly owned subsidiary, and it's a positive news flow here. Land acquisition is what they've done in Dubai, so we'll watch out for how the stock reacts to it. Apart from that, the company has also signed an MOU with Mumbai Port Authority. This is to develop a CGO complex on 25 acres of port land. So yes, both positive news flows here. Let's see how the stock reacts to this. Next up, let's talk about Lenskart. Now, Lenskart is also going to be in focus because its board has it has approved the investment of Korean, Korean won, which is a 3 billion investment that they are going to make by it's going to happen through Lenskart Singapore. They are going to acquire 29.24% stake in Korea-based iNear Corp. It's going to strengthen the proprietary eye testing and lens cutting segment of the company. So yes, we'll watch out for this one as well. Next up, let's put the spotlight on CMEC. Now, this one is going to be in focus because its vessel CMEC 3 has sailed for Part 3 replacement pipeline project. So, yes, this is also going to be a stock to watch out for. Next up, we have a positive development coming in for Ola Electric. Now, it has received a sanction order dated December 24th from the Ministry of Heavy Industries. Now, this order is under PLI Auto scheme for a value of about 366 crore rupees. It's an incentive claim that the company had filed for the period of FY24 to 25, and it has now come through. So yes, a positive development here. Let's see how the stock reacts to it. And lastly, from the mid-cap IT space, we have Coforge, which is going to be in focus because its board is going to mull fundraising today. So yes, lots of stocks to watch out for today, but that's not it. Rabinder is here with another list of stocks which are going to be in the spotlight today. Rabinder, good morning. Which are the stocks that you're tracking today?
Well, as on the back of order win, Satvik Green Energy can be in focus, where company has received an additional order from the Maharashtra State Electricity Distribution for order of for 1,000 of grid solar water pumps worth of rupees approximately 17 crore, and with this the total order now stands at 1,815 pumps, which is valued at approximately 30 crore. So back of this order win, IRCTC Satvik Green Energy can be in focus. Next is IRCTC can be in focus, where mail express train fare has rise by 2 paise per kilometer, and sleeper class and first class ordinary fares has rise from 1 paise per kilometer, and the revised fare will be effective from today. So back of this, IRCTC can be in focus. Ultratech Cement can be in action, where company has commissioned additional cement capacity of 1.8 MTPA and capacity addition of 0.6 MTPA in Dhule, Rajasthan, and 1.2 MTPA at Maharashtra. Vikrant Engineering can be in focus on the back of their order when company has received an order of 459 crore from the NTPC Renewable Energy Limited for EPC order for balance of system for a 400 megawatt AC solar project in Uttar Pradesh. Acme Solar can be in focus, where company's subsidiary Acme Eco Clean Energy has commissioned additional 4 megawatt out of the 100 megawatt wind power project at Gujarat, and with this the company has achieved a commission capacity of 56 megawatt out of the 100 megawatt. NTPC Green Energy can be in focus, where 69 capacity of Khadwa Part 1 solar PV project in Gujarat has been declared operational. And lastly, SGVN can be in focus, where company's arm SGVN Green Energy has achieved commercial operation date of 1,000 megawatt Bikaner solar power project. So back of this, SGVN can be in focus.
Thank you, Rabinder, for taking us through all of the stocks that are going to be in focus today. But time now for a very short break. We'll be right back with more on the other side. Right, time now to take a look at what's happening in the IT sector, and let's see what the NASSCOM has to say about the new visa lottery system. Now, And the United States is actually changing its H-1B visa selection process. A new wage system, a wage-weighted system, will replace the lottery. Now, this move is expected to create uncertainty for businesses, especially in India. Now, NASSCOM, which is an IT industry body, they have raised concerns about compliance and also workforce planning that's going to happen going forward. This new system will take effect on February 2026. Now, NASSCOM has also warned that an abrupt switch would add uncertainty and compliance burden on companies, especially for employers that plan on hiring around academic calendars, delivery schedules, and also product cycles. Sumita joined in earlier with all of the details from the story. Let's take a look.
It's a detailed note that NASSCOM has floated, and it states that uncertainty is going to continue as far as the IT industry is concerned on the account of the changes that have been made by the Donald Trump administration on the H-1B visa policy. In fact, the industry body has now recommended that a delay in implementation of the changes until the FY28 lottery cycle would provide employers a necessary runway to adapt processes, ensure compliance, and also maintain confidence in the stability of the US talent and investment environment. In fact, let me also take you through the other things that this note has essentially mentioned. NASSCOM has raised concerns. It says that policies represent significant departure from the long-standing lottery system, and a transparent and trusted visa framework is the need of the hour, and that really is essential to maintain the strength of the US technology system. In fact, it also suggests that this system could potentially introduce regional and occupational distortions, and wage levels will vary significantly by geography, and a weighted model could inadvertently disadvantage small and medium-sized enterprises. So they are essentially talking about the impact that this policy is going to have on medium and small scale sized companies. In fact, it also says that under a weighted system, it will restrict opportunities at the entry level, and that could weaken future talent base. And the policy it could discourage international students from pursuing advanced education in the United States. And it, in no uncertain terms, it mentions that any structural reform must preserve predictability, equity, and alignment with statutory intent, and that a phased implementation is essentially the need of the hour, so that companies can find time, companies can get time to implement all of these necessary measures, because remember, it involves the movement of people as well.
All right, so that's about the IT sector, but now let's shift focus to the banking space. Now, SFIO has launched a probe into IndusInd Bank over accounting issues after a preliminary examination of the lender's financial disclosure. My colleague Ankur Mishra is here to take us through all of the details.
Yes, IndusInd Bank has now officially received a letter from SFIO seeking details from the company, and this probe is under section of 212 of the Companies Act, and the relevant information has been asked from the company. Now, this is related to the derivatives issue which has been ongoing for the company. Remember, EOW from Mumbai had already been doing the preliminary probe into the matter, but we understood that there was nothing which was found against the company. As a part of the process, anything over 1 crore is reported to SFIO, and now SFIO under MCA has got into action, and they have asked for relevant details from the company. The company has already maintained that they are completely cooperating with the investigative agencies, and earlier they had disclosed that there was no official intimation which has come from SFIO on the matter, and now a formal letter has been received by IndusInd Bank. Now, this means that SFIO will formally probe into the matter, and we need to wait and see whether or not anything is found by SFIO.
All right, so that's the latest that we are picking up on IndusInd Bank. But now, as the year comes to an end, Swiggy has released its report on food delivery and quick commerce trends that emerged this year. Now, with a staggering 93 million orders this year, the much-loved biryani has emerged as the most ordered dish for the 10th year in a row. Anjali Palod, my colleague, is here to take us through the details.
As we draw the curtains on 2025, Swiggy has come out with its report detailing the highlights of 2025. Now, this was another massive year for India's favorite dish, that is biryani. It stayed right on top with 93 million orders. That's more than 3 plates served every single second. Chicken biryani was the clear winner with nearly 58 million orders, while burgers and pizzas were the next most popular picks for the nation. But we weren't just staying in. The dining out scene has exploded as a lifestyle choice, with over 23 million diners heading out to their favorite spots. Now, in all of these dining out orders, there are a few trends that have emerged in terms of the cities where people went out the most. Bengaluru, Delhi and Hyderabad, they were the ones that emerged as the top hubs for foodies, and through all of these dine out experiences, diners saved close to 774 crore rupees by using Swiggy Dine Out. But the real trend was the fancy or premium dining, which saw bookings more than double. Now, India's taste buds traveled the world this year. In terms of cuisines, we saw Mexican and Tibetan food both crossing the 10 million order mark, and Korean flavor weren't far behind. At the same time, people also looked closer to home. So local Pahadi food grew 9 times over, while other local cuisines doubled, proving that authentic regional dishes are also a huge hit. Now, if we talk about the hunger pangs that hit between 3 and 7 p.m., the whole country seemed to have a snack ritual. More than 10 million burgers were ordered in this window alone. But the classic chai samosa duo held its ground with over 6 million combined orders. And for the night owls, again, chicken burgers were the top late night pick. Now let's talk about Instamart, where the carts galloped wild. One power shopper spent 22 lakh rupees this year. We also saw a single cart in Hyderabad hit 4.3 lakh for 3 iPhones, while a Mumbaikar bought 15 lakh worth of gold in one go. On the flip side, the smallest order was just 10 rupees for a simple printout in Bengaluru. If we talk about the kitchen convenience reigned there too. India guzzled 4 packets of milk every second, and paneer officially won the dairy war, outselling cheese by 62%. People are loyal to their staples, and we saw masala flavored chips becoming the #1 late night order. In fact, one person in Kochi ordered curry leaves 368 times in the year. But the kitchen MVPs continued to be dahi, eggs and bananas as well. If you talk about the festivals, they bought some of the busiest moments for delivery. On Valentine's Day, for example, rose orders hit 666 per minute. During Dhanteras, gold purchases shot up by 400%, and on Ganesh Chaturthi, over 2 lakh modaks were delivered. If we talk about Navratri, the rush was so big on Ashtami that 2 lakh orders were placed in just 1 hour around 8 p.m. Finally, if we talk about how different cities had their different obsessions this year, Bangalore became the tipping capital, with one local giving 68,600 rupees in tips. And it's also the protein capital for the healthy choices. Mumbai is the energy capital, where one user spent 16.3 lakh rupees on Red Bull sugar-free alone. Meanwhile, Chennai is the pet parent capital, with one person spending 2.41 lakh rupees on pet supplies. If we talk about the smaller cities, Rajkot, Ludhiana, Bhubaneswar also saw massive surges in orders, and that's how India Swiggied and Instamarted in 2025.
All right, so that's all about how India ordered in 2025, but trade in the year 2025 was all about tariffs and countries trying to navigate Trump's tariff threats. Some countries gave in to Trump's demands, while some negotiated, and then there are countries fighting out the unjustified tariffs still. Amid all the trade uncertainties, India and China, they've managed to hold their ground. So will the year 2026 usher in new trade dynamics? Catch this report by Samita here.
Two 2025 was a year where nations redrew red lines, sometimes with words, sometimes with new weapons. If 2024 was about choosing a direction, 2025 was about agility. Order gave way to disorder, with only one familiar and unmistakable message written on the wall: America first. The year began with a glimpse of what was to come. Negotiate on America's terms or else. Soon after, global power was exercised through economy-pinching tariffs and arm-twisting, whether to fix trade imbalances or settle conflicts. Steel, autos, clean energy, advanced chips, industries became bargaining chips in the large geo-economic puzzle. For allies and rivals alike, these were warning shots, catching many by surprise. India and China held their ground despite punishing tariffs, even though the world's largest economies didn't fully decouple. But they didn't reconcile either. The outcome: unilateralism, ironically, gave way to multilateralism, even as nations raced to secure economic partnerships to secure supply chains.
China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy and Russian energy products.
I think, unfortunate and unfair position of being the only country so far sanctioned. The Russians themselves haven't been sanctioned for their conduct or their unwillingness to negotiate. And certainly China, a much larger purchaser of Russian oil and gas, hasn't been sanctioned. So I'm not sure Trump is paying attention. I don't know what to ascribe this anomaly to, but it's something that I'm very much worried about from the U.S. perspective, could drive.
贸易战没有赢家，保护主义没有出路。美方推出单边关税措施以来，不仅没有解决美自身任何问题，反而严重破坏国际经贸秩序，严重干扰企业生产经营和民众生活消费。
On the other hand, the promise of ending wars didn't see through, even as the conflict in Eastern Europe continues to rage on amid sporadic breakthroughs. Across the Middle East, shifting alliances and fragile peace kept diplomats on the move. Tense summits, shifting alliances, fragile peace, and blunt statements followed. The result? New, unusual alliances emerged, sending out a strong message of rejecting unilateralism. A year of tense summits, sharp rhetoric, and cautious handshakes, even as diplomacy became transactional, personal, and unpredictable. New bilateral deals emerged: energy exports to Asia, defense agreements in Eastern Europe, and a renewed push to bring manufacturing back to US soil, even as investors and markets try to readjust to a world marked by volatility. 2025 became a year that tested old alliances and forged unexpected new ones.
Will that bring stability? We don't know, because I think you have a leader who likes constant chaos, and so I think will that go away? My feeling is no.
But can 2026 be any different? That's the one question everyone is hedging their bets on. Will trade continue to be the stick to beat nations with? Will uncertainty remain the price of attention? While some of these questions still need to be answered, one thing is certain: the world remains reconfigured. Which side does the power center shift now, and which way the wind blows, that is still to be seen. This is Anjali Palod for ET Now.
All right, so that's all about world trade in 2025. But 2025 also saw an accelerated rally in gold and silver, all driven by global uncertainty, inflation concerns, and investment demand. Now, jewelry retailers, they benefited from the higher footfall, but rising metal prices also tightened margins. Anjali caught up with Suvankar Sen, MD and CEO of Senco Gold, and also Amit Modak, the CEO at P&G Sons, to decode the same. Let's take a look.
2025 has been an eventful year for jewelry retailers. Precious metals, gold and silver have seen an accelerated rally as safe haven investments. In such a scenario, how have jewelry retailers addressed changing dynamics and tweaked strategies to serve customers' needs? We are joined today by Suvankar Sen, the MD and CEO of Senco Gold and Diamonds, and Amit Modak of P.N. Gadgil & Sons to take us through the year 2025 from the perspective of jewelry retailers. Welcome, gentlemen, to ET Now. I would like to jump right in by getting the highlights of the year from the both of you. Mr. Sen, the one big trend of 2025 for Senco?
No, I think that, 2025 has been an historical year, as you rightly said, because in a single year, when we see that the gold prices have shot up by almost more than 40%, it happens very few times in the history. And for the Indian consumers who have always been extremely, loving gold and bullish about gold and having that faith and trust in gold, I think for Senco, one of the, I think the achievements as once, along with the fact that on a single month of the festive season, we've had a 1700 crore sales. But other than that, our endeavor to manage and, meander through these volatile times and to understand the pulse of the consumer, because in these times when in a single year suddenly your budgets have gone up by 40-50% to buy the same kind of jewelry, what we need to do is innovate and create jewelry that is within the budget of the consumer, to understand their need, their pulse, and then create it and create those lightweight, not only lightweight in terms of sleek modern designs, but lightweight also in the traditional designs, that the kind of jewelry that we are making for the weddings. And I think for us, we have done in our team, our data analysis, everything has done well to fulfill that need of the consumer.
And now to you, Mr. Modak, what were the most notable changes that this year has brought?
See, retail jewelry is facing little bit challenges right now because of the increasing prices. Like June till date, that in June it was around 1 lakh rupees per 10 gram. Now it is almost 1,35,000 rupees per 10 gram. 35% increase is there in last 6 months time. So that is affecting the grammage wise sale of the jewelry, and that weight wise lower sale is affecting to the industry as a whole. Value wise it is getting maintained somewhere, but value wise only increase is not sufficient. Weight wise increase is also required. Secondly,
all right, so that's all about the jewelry trends that India saw in 2025. But time now for a very short break. We'll be right back to take. It actually zoomed in trade on Wednesday as well. This was after BP agreed to sell a 65% stake in its global, that is Castro Global Unit investment to investment firm Stonepeak. This is for a value of $6 billion. This deal values the business at $10.1 billion, including debt. Srishti is here to take us through the details.
Well, yes, that's a big deal that has been announced at the parent level of Castrol, wherein Stonepeak will acquire majority controlling stake of 65% in Castrol Global from BP. And this particular deal is having an enterprise valuation of $10.1 billion. And that's indeed big, because even alongside this particular announcement, another interesting announcement is that now Canada Pension Plan Investment Board will invest up to $1.01 billion alongside Stonepeak. So at the parent level, that's quite an exciting deal that has been announced. And along with that, BP has made its plans clear that post this deal as well, they will retain the minority shareholding of 35%, ensuring continuity and the brand linkage. So along with that, what we are getting to see that, yes, this transaction is at the global level, but key to note is that with respect to the listed entity in India, that is Castrol India, Castrol parent holds around 51% stake. Now with the 65% stake sale that has happened at the parent level and 51% holding in India, that could definitely imply an open offer that could be triggered when this deal is through. But for now, what we are getting to see is that the company has made its plans clear that any future structural changes for the India entity to be monitored post the deal closure, and not now. But yes, the market is seeing this potential value unlocking to be in place and a long-term strategic focus to be there as well, because Stonepeak does bring the long-term capital and the industrial investment expertise, and even the stock is quite very excited in trade right now.
All right, thanks, Srishti, for that. We'll keep updating you with the latest on the Castrol India deal, but let's move on. And 2025 really was a year that tested market resilience. From global geopolitical stocks and volatile commodity cycles to shifting rate expectations and record domestic participation, Indian markets navigated a very complex landscape. And as we turn the page to 2026, the focus now shifts to what will continue to drive momentum and what could pose fresh risks. Let's break that down with the key factors that move the markets in 2025 and the big themes to watch out for in 2026. And Ashesha is here with all of that.
Well, yes, as 2025 comes to an end, we decided to take stock of the big factors that moved the markets in this calendar year. And the first and the most important one was Trump tariffs. Remember, US President Donald Trump imposed tariffs at the rate of 50% on India. This was in the month of August. Negotiations are underway to reduce this tariff rate lower from 50%, but there has been no outcome so far. This impacted several sectors, including textile, gems and jewelry, pharma and seafood. These were the 4 sectors which were most impacted on account of the tariffs that were imposed by US administration. The negotiations, as I mentioned, are currently underway. We are expecting an outcome anytime soon, but so far this continues to remain a headwind for Indian equity markets. Perhaps we will see some outcome in 2026. Let's also talk about the big consumption boost by the Indian government, where in budget last year, the government went ahead and provided relief on income up to 12 lakh rupees. So that was one big trigger. And GST rate rationalization, which came in the month of September, which came into effect on the 22nd of September. These were the 2 big triggers that helped aid consumption and will perhaps likely aid consumption in 2026 as well. Meanwhile, geopolitical uncertainty, this continues to remain of play and a factor to watch out for in 2026 as well. Conflicts in West Asia continue. There is no end in sight, although US President Donald Trump had claimed that most of these tensions will ease. That has likely not happened. FII exodus, another factor to watch out for. Remember, foreign institutional investors sold shares worth nearly 3 lakh crore from Indian equity markets in calendar year 2025. Fed action, expensive valuations and risk aversion. These are the 3 factors which led to FII exodus from Indian equity markets. So yes, several factors which continue to remain at play going forward as well. Another factor, monetary easing. Remember, Federal Reserve cut rates by 75 basis points in calendar year 2025, and RBI also cut rates by a whopping 125 basis points over the last 1 year. So that's the kind of monetary easing that we have seen not only in the global market but for Indian economy as well. But remember, primary market action continues. Primary markets raised nearly 1.7 lakh crore rupees in this calendar year, and the pipeline for 2026 also continues to remain very solid. We have a whole host of IPOs lined up, including Reliance Jio. That will be one big IPO that the market will be watching out for. But as we step into 2026, let's talk about the important factors that you need to keep on your radar. First, of course, is geopolitical developments and the kind of developments that we see over the next few months. Fed action, monetary easing is likely to continue going forward. Earnings recovery, FII flows and consumption demand, and how that is likely to pan out going forward. So yes, several factors which were at play at 2025, and these are the 5 things that you need to watch out for as we head into 2026.
All right, so lots to track for 2026, some major themes to track in 2026. But a key highlight for 2025 was definitely precious metals like gold and silver, which are still on track for their best annual performances since 1979. Stellar moves is what we have seen in precious metals. Silver has gained more than 11% this week. Meanwhile, oil, that is set for its biggest annual decline since 2020. Now, what were some of the key factors that impacted precious metals and oil as well? Ashesha is back with us to take us through the details.
Well, yes, 2025 clearly was the year of precious metals. That was one asset class which was shining bright, especially when it compares to other asset classes like equity and cryptocurrency. Precious metals clearly were shining bright. Silver and gold, you did talk about the yearly moves. Silver, remember, is up nearly 140% this year so far. And gold too is sitting at near record high levels. In fact, silver just today crossed that $75 per ounce mark in the global market. It is up 4% today, and remember, it has rallied nearly 11% this week so far. That's the kind of moves that we have seen in the precious metals market. In fact, it's not just silver. Let's also talk about gold. It is now trading near that $4,500 per ounce mark in the global market, and domestic MCX prices are also moving in tandem. Now, if you look at the yearly moves, 4 important factors which led to this. One is dollar index, which continues to fall, and because of the inverse relation between dollar index and precious metals, we have seen that kind of uptick come in for the precious metals market. But apart from that, geopolitical tensions which fail to ease, we also have monetary easing which is likely to continue going forward. So that is also one factor that helps safe haven demand and buying by central banks globally. So these are some of the reasons which has led to an uptick in precious metals so far, and the rally is going to continue. At least that is what the trends are suggesting. Silver passed the $75 per ounce mark, and gold too is nearing $4,500 per ounce, near those record high levels that we saw a few days back.
The trend is likely to continue as far as precious metals are concerned. But we also caught up with Punita Kumar Sinha, the managing partner of Pacific Paradigm Advisors, to help us understand which were her top picks from across the sectors. Let's take a look at which are the top picks and the rationale behind that.
Financials, selective tech, real estate, capital goods, anything again infra related, or it will be, of course, I think stock selection will obviously be key, but in the mid and small cap sector, there could be just general rally across mid and small caps as well. But one lid or cap to the markets is, of course, the IPOs. There's so many IPOs that we've had in 2025, and then maybe if the market recovers, there'll be many more that will come, and that always provides a cap on the returns. And so that's something to watch out for.
All right, so speaking of stocks, a stock that saw stellar rally on Wednesday was Vikran Engineering. We caught up with the management, Rakesh Markhedkar, the promoter and chairman of the company, as well as managing director, to understand what their current order book is looking like, which is actually at 4,400 crore rupees right now. This is on the back of a big order that they won very recently that was over 2,000 crore rupees. Let's listen in to what the execution timelines are looking like, and also what the projections are for the rest of FY26.
Current unexecuted order book as of today is 4,400 crores. And apart from this, we have approximately 2,100 crores where we already declared lowest bidder, which we will be gaining this new order where we are L1 by maximum by 15th of January. So with this put together, we'll be having 6,500 crores unexecuted order book by 15th of January. And by end of this financial year, we will have around 5,500 crores. Means we will be starting new financial year with 5,500 crores order book in place, which has to be executed between that 18 to 24 months. So this shows the very clear visibility of our next two financial years.
All right, so that's about Vikran Engineering, but we also caught up with Titagarh Railways management to understand their capex plans and the road ahead for the coming year. Let's take a look.
The last tender was finalized in 2022-23, and it was a 3-year tender. So, we were expecting that the tender should come out by end of FY26, which is either the December quarter or Q3 or Q4. And we believe that this should come in. Capex that has actually gone in over the last 10 years can only be utilized and serviced if the railways increase their traffic. And we believe that the capex allocation in that spectrum is not going to get disturbed anytime in the future. I'm not talking about this year. I'm talking about the next 10-20 years. Sure. So as far as the wagon is concerned, we see this to be a range-bound business. I always say that this is a business at cruising altitude. I don't see much of turbulence or ups and downs there, at least for the next 3-4 years, till the next spate of the power plants or the next big growth in the railway traffic movement comes in.
All right, so that's the word coming from Titagarh Rail just ahead of the budget 2026 in February. But before we wrap this edition of Market Cafe, let's take a quick look at how the Asia Pacific markets have settled in. And it's a decent day coming in for the Asia Pacific market. China's Shanghai index trading about 0.2% higher, 3,960 is where it is at. Japan's Nikkei, that's continuing to trade in the green, leading the gains on the Asia Pacific front. 50,900 is where the index is trading, up nearly 1% in trade today. South Korea's Kospi, that's also trading about about 0.7% higher. So a good day of trade coming in for the Asia Pacific front. However, Nifty, we did end above that 26,142 mark on Wednesday, but it was a rather negative day that we saw after a positive start to the week. And today as well, we are expecting a mildly negative start, just about 58 points downtick at the start for D Street. So yes, that's how the Asia Pacific markets are looking, and Nifty is poised for a slightly mildly negative start, and let's see how that pans out. But with that, we're completely timed out on this edition of Market Cafe. I'll take your leave, but don't go anywhere. The market is coming up next.